All right, everybody, welcome back. Halfway through the week, and so far, so good. A little bit of news that came out of China. Apparently, they're going to block iPhone users from bringing their phone into work, and that hit Apple this morning, sent them down a little bit. It's not a big thing to, like Ripple-wise, it shouldn't continue to be an issue, or it shouldn't escalate. It's just a little bit of news. But that's kind of the idea when we look around in the mornings, for how we approach our morning briefing. You do want to look at the news that you find and ask, is this going to have a longer term impact? Some of the examples that come to mind is when that ship got stuck in a canal. That thing was stuck for like a week. It really interrupted supply chains around the world. That was a pretty big deal. Or when Boeing had airplanes falling out of the sky, it affected Boeing. Even now, still today, there's still issues with the ramifications of that. And then obviously, COVID was a big deal. There's some talk of a part 2 to that. If you're keeping up on the latest things that are going on with hospitals and CDC mandates and recommendations, and I don't know, it's a big old mess. It looks like we might be gearing up for another round. That will absolutely affect markets around the world and have a lingering, lasting impact on our day-to-day business. Eyes are still on Europe. You're going to keep your eye, or want to keep your eye, on what's going on with European central bank speakers. We got a host of them today. And then we also have our US Fed speakers out chipping teeth. Remember, we want to look for a common narrative. Each one of these Fed speakers, they try to be their own person, but at the end of the day, they need to sing from the same hymn book, right? They all need to be on the same page. And we're looking for them to kind of say the same thing. It reinforces whatever narrative it is that they're trying to convey. And as much as the market continues to not believe what the Fed is saying, the Fed has continued to provide guidance very clearly. No rug pull or gotcha moments or anything. Their message continues to be higher for longer, not cutting, and maybe not pausing. So, we keep seeing the market price in these cuts and these pauses, but that's not what the Fed has said. So right now it is a focus on Europe and a focus on China. Oil this morning is starting to pull back a little bit, but it's after it already made a really big move yesterday based on some OPEC news and the idea that they're going to sustain this cut for an additional 3 months. The surprise to the market is that they normally would be an announcement of a 1-month time frame, and then they'd wait a month and make the announcement again, and they'd wait a month and make the announcement again. This time they just came out with a 3-month announcement all at once. That's what the market didn't like, or that's what got the market bid up, however you want to see it. So, it's not just the idea that we know news is coming out or something like that. It's how the market takes that news. And speaking of energy or oil and things like that, today, it's Wednesday. Normally, you would expect to get the oil report today, but on a short week like this, the oil report very often ends up on Thursdays when we get the nat gas report. So, just something to keep in mind for a short week. When we look at what is on the agenda today with impact, Bank of England monetary policy, the hearings report. So that's a big deal. And then ISM services manufacturing at 10 o'clock. We also get some Canadian Bank of Canada interest rate decisions. that would be like us getting the FOMC report. So, if you're asking how big of an impact could this Canada one be? Well, how big of an impact is our own FOMC? Yeah, it's that kind of day, right? So some really big stuff today. This should have put us in a holding pattern while we waited for the data to come out. But when we get to the charts, you're going to see that's not exactly what we had in the overnight hours. And then we've got Collins and the beige book, and then we've got Logan. So we got a pretty busy day. These names remind me of like an X-Men team or something. I don't know. They're the sorriest nerd group of people. Anyways. So as you can see tomorrow, Philadelphia Fed President Harker, Chicago Fed President Goolsbee, New York Fed President Williams, Atlanta Fed President Bostic twice, and then Dallas Fed President Logan. It's a full house tomorrow. We want to really pay attention to the narrative, right? And it's not like you have to go out and listen to all of these things. A couple of different ways you can try to find that narrative. Take their printed, written statement, feed it to AI. Ask the AI to, give you a nice little summary. You can even tell the AI to dumb it down a little bit, right? If it's using big words or if it's not connecting the dots. A lot of different ways that you can absorb all of this information without having to crawl through the reports for 2 hours. Of course, that'll be tomorrow. So if you're lucky, you can get their written statement early. It's not like they don't get released to the press early, because they do. So yeah, kind of get ahead of the game a little bit. All right, the Japan is up the most with a 0.5%. Hong Kong is flat, which, I mean, in the grand scheme of things, I guess we're going to consider that to be pretty good. We're still looking for that stimulus, right? And that doesn't look like we got any out of Hong Kong today. The Russell is down the least, which I don't know, might make a little bit of sense simply because of how much it moved yesterday. The Dow Jones behind the Russell being down the least, and then the S&P and the NASDAQ is down the most at 0.25%. But really, 0.25% for the NASDAQ is nothing. That thing can blink and move that. And with Europe on deck this morning, down more than 0.75%. So Apple took that gut punch, and this morning that gap is holding. We could anticipate, a gap close, and so far all we managed to do was get back up and close this little minor liquidity gap. This is just liquidity gap though. It's not the actual gap. So it still has some work to do if that's our focus. So we continue to watch US dollar Japan. It kind of went a little haywire yesterday. It's getting a lot closer to that 148. Bank of Japan was very specific, and they have made it clear if we get into that 152 area, they will step in. If you look at their 10-year, which is why we got to be careful when we try to take them at their word. They were defending that at around 0.25, right? And then it kept getting out of control, and they finally said they'd let it go to 0.5. So we were doing that for a while. And then they said, okay, well, we'll let it go to 1. At the worst, we'll let it go to 1, but we'll step in and defend if it gets, past 1. As the week they said that, we popped up and they defended it. I mean, they came in and whacked that thing down. You can't really see it on the weekly chart, but they did defend it. And even though we're nowhere near 1.0, they still, as soon as it started to go up, they came in to defend. So we got to be careful with, their statements. But still, we continue to march closer to that intervention level. And if you don't trade this and you're thinking, so what? I don't care. You can trade it through FXY. It'd be a long here for a short there, right? If you think US dollar Japan is going to get intervention and go down, then you would think that this is going to go up. This has options. It's not an overly crazy expensive stock, less than $63 or around $63. But it's how this US dollar Japan moves in relation to the S&P or how the S&P is going to respond when Bank of Japan decides to intervene, because it will move the S&P and it will move the NASDAQ. If you want an idea of what that looks like, look at the S&P on a daily chart and look at October of 2022. It wasn't that long ago. After yesterday's moves, POT is up the most, nearly 2.5%, and cybersecurity names are down the most. Other than that, everything is in the middle with not enough data. We want at least 0.5%, right? We don't have 0.5% on any of those other spaces. All right, with all this stuff on deck, you would think that they would be hedging at this point, that we would see a market maker move this morning, and we got nothing, no market maker move, which implies they're not really that concerned about what's on the calendar today. Or maybe they just think that they have time and they'll wait until later in the morning to hedge. That's always possible too. You'll know if they start to come in and hedge, because you'll start to get market maker move on ES and maybe SPY, SPX. You can see this consolidation, even in the kill move. It's kind of a shunted move. It didn't move all the way to 4 o'clock. It made a 1 hour move and then just stalled out without reciprocating back up to the start of the move. 4,500 is the line in the sand. It's the close from yesterday. We got our own Globex low right above that 10-day moving average. And surely we're going to be interacting with that 10-week really soon. Let's just go ahead and borrow this 10-day and use it for the 10-week. Easier to do that than just to add another indicator. 44.59. And that weekly chart showed us that we're going to hit an SMA. And that level would be 44.93 for that SMA on the weekly. You can see it here on the weekly chart. When you're doing your top-down approach, it doesn't hurt to look around with different ones, the SMA, the EMA, the TEMA, whatever the whole moving average. There's so many different ones out there. Just to kind of ask that question, are we going to hit anything? And is it enough to, to change anything? A lot of times I just end up writing those in the quick notes or the scratch pad, and if we come into that level, just pay a little closer attention to it. The volume is not really all that light. They're not sitting out this morning waiting on the data. They're interacting. The thing is, we're not really going anywhere. So one of the things that newer traders maybe forget to take into consideration is who's doing the trading in here at any particular point in the day. Who's doing the trading and what is their goal? Well, look at what we got right now. There's at least two firms involved in this. One is unloading a position and one is picking up a position. It's not a really big deal. It happens all the time, but there's no dominance here, right? It's not like everybody's buying or everybody is selling. When this trade-off is done, we'll move. But until then, or unless some news comes out or something alters what we have, this is what we're going to continue to get. So a nice tight range. And while we're sitting here in this tight range, we're going to build up energy. You can turn on something like the RSI Laguerre and you can gauge how much energy we're building up. And then kind of look for a J-hook pattern on that thing for the trade. 10-day, 30-minute volume profile. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. The point of control came up to us. We've started working our way down through this shallow area. It's just interesting that we're not falling through it like we ran through it back here. Right? There's nothing there to stop us. There's no real pivot points to hit or anything like that. So why we're not just dropping straight through it is a little bit of a mystery. It doesn't owe us anything, right? There's nothing promised to move through this shallow area quickly, but it stands to reason that it's not the S&P that's making this move, right? It's the S&P is the consequence of something else. And whatever that something else is, whether it's moving inverse to us or not, it's fighting resistance or it's finding support. And so it pauses and stops along the way, which is why we're not just dropping down through here. We don't know that for sure. There's no way to prove it, but it's a thing that you pick up on after a while, right? That the S&P is not always the leader, and very often it is just being pushed around by algos or an inverse market somewhere, or a correlated or a non-correlated market. Correlated but inverse gets all kinds of complicated. All right, we got a VPOC from yesterday. So now if we do rally to the upside, we've got one to contend with. It's very nearly on the COG line. $45.0775. Nope, that's a little too. $45.08. Yeah, that'll do it. $45.08, nice round number. So if we do bank to the upside, then $45.08 is going to be an area of interest. Remember, that's not support or resistance. You got a pretty good morning, all things considered, for the anticipation of a play. Very clean bottom and a very clean top. All we got to do is get out of this range one way or the other, and you've got to play. Now, granted, Yesterday doesn't look that bad. Nice, tight, narrow range. But remember, we have to put yesterday with Monday. All of that is your range. Now, that's not my decision. That's the broker's decision, right? That's what they do. So when we get out here to the daily chart and we're looking at where we are at inside of this weekly expected move, remember, it's only going to show 4 candles this week, right? We had the close last week and then the open this week, and here we are today. So from Friday to yesterday, it's wrapping Monday and Tuesday's price action in that one single candle. So again, it's not me making that decision to integrate that data between Monday and Tuesday. It's what the brokers did. It's what you want to do. 44.81.5 is the weekly expected move low. So want to keep that in mind. Let's get back there for a minute. All right, so we're looking at the 10-day. We're nearly back to it. We were just looking at that on the intraday chart. Might get a little bit of crossover. And the 10-week. About 0.75% above that 10-week. But we're still on the decline, so there's still the expectation that we can come into contact with it. We're back to the weekly pivot point. It's worth noting. So when we're above the weekly pivot, we maintain that bullish posture. And when we're below the weekly pivot, we maintain that bearish posture. And then we get a little nervous when we get too far away. And the bullish posture starts to fade away if we're falling back towards that level. So just to kind of maybe clear a little of this up, we can see how we reacted last week. The weekly pivot point from last week was down here. And we maintained that bullish posture as we moved farther away from it. Kind of stalled out. This distance here is our concern, right? We start to get too far away from it. We begin to stall out. We get a new week. The weekly pivot was brought up to us, and now we're interacting with it. So, there's a kind of a plus or minus level on each side. Above or below by a couple of points is not going to be too bad. But, that tanglement where we're just sitting there kind of chopping around on the weekly and then we finally get away from it, it often takes a while, as we can see here, before it really starts to drive away from that zone. And there's previous examples where we try to get away from it and fail, try again and fail. So it's just a good starting point of kind of considering where we're at, above it or below it. Are we going to hit it today or not? And obviously, we're there. We have an MDP that's a missed daily pivot. So if we do happen to rally to the upside 45.11 cog line, it's going to be something that we hit. this was one of the things that was throwing people off yesterday. In the upper left, we have KRE. This is regional banks, which was weak through the morning session and then broke down as we got into the afternoon. Completely different than the NY Fang, which was kind of sideways, not really weak per se, but not really helpful. Then a breakout, fantastic Busby retest, and a run into the upside, closing near the high of the day yesterday. So usually if you think of the FANGs, Apple, Microsoft, Google, Netflix, Snow, AMD, you think of those big names driving the NY FANG to the upside, you would think that the S&P and the NASDAQ would also go to the upside because those names are big enough to move the markets. And yet breadth was negative. Cumulative tick was negative. The advancing versus the declining issues in the NASDAQ was negative, and in the S&P was really negative. So it was those names trying to do all the work, but the tide was against them. Something to keep your eye on today. If we can get these two working together, then we've got something to work on. All brokers are different, but on Thinkorswim, one of the things that you can do is go to Market Watch when the market is open. Go to quotes or visualize and change this heat map to an index and then pick your index. You can actually put your own watch lists in here. You can put the FANGs in here, whatever you want. But on Thinkorswim, if you go to public, those are the ones that are pre-installed. So when you open Thinkorswim, you have those. And in those public lists, you've got the NYSE, the Dow, the Russell, the NASDAQ 100, and the S&P 100. These are detachable, and then you can stack them up and you can load as many as you want. So you can look at the S&P and the NASDAQ and the Russell all at once. They make a nice little window too. You can just make them nice and small and then pin them on top so they don't fall behind your screen. And you're going to want to see breadth today, right? That would be issues, which are companies, more issues going up than down, or more issues going down than up, whichever direction the market is going. And then follow that up with the money. They always say follow the money, right? So follow the money. If you see divergence, it's a heads up. Divergence would be if price is going up and you've got more issues going up than down, and yet you've got more money going out than in, or vice versa of all of that, right? The money leads, the money's the heads up. So that's a simple little thing to do. Kind of refer through it throughout the day. All it is a more detailed advanced decline. That's it, right? It's not like there's some special magic to it or anything. It's just an advanced decline with money put into it. If you don't have that on the broker that you're using, just use advanced decline and add something like a money flow indicator, right? There's a number of them. Just search money. You got Chaikin money flow, the money flow index, money flow oscillator. You got a lot of choices to choose from. All right, nat gas is down the most with airlines behind that. And then technology, but technology is not down enough to meet our criteria. We want at least 0.5%, and we're not there. Financials are down 0.25%, but again, that's not enough. The marijuana space is up this morning more than 3.5%, getting closer to 3.25%. This is the ETF for the pot stocks MJ. It's not exactly my vehicle of choice, but it gives us a heads up, right? We're just looking to see what sectors, what industries that we want to focus on. And pot stocks are doing really good this morning. So they're leading the way out of everything that we could be looking at. That's pretty high up on the list. And then we've got industrials, but they're just not enough yet, right? VIX products, bond products, none of those are up enough. We start looking at what's down. The China ADRs, the China constituents, BABA, Baidu, JD, PDD, all that stuff. Precious metals are down. Biotechnology also down, and then everything that we had mentioned previously. Now, there's always something. Like this dash for trash. Penny stock is making some waves this morning. Or TRBN, another one. It can. It's getting a lot of flows. But nothing really solid, right? In the pot stocks, we got Tilray. It's coming out of that base that it's been in all night, but it set a high yesterday. We can see it here on the daily chart pretty good. It set that high up around 340, and then it just fell back and gave it all away. It's going to have a lot of work to do to get outside of this candle. So step by step, we want to measure the candle market by a 50% level. It needs to hold above that. Then it needs to get to the top, and then it can break out and kind of work from there. It forms this really big cup going all the way back to the first week of August or the second week of August. And if I start to zoom out, you can see the trend line that we're fighting against. That's an automatic trend line. I didn't draw that, right? Trend Spider drew that. So we're kind of stuck in this. And we got MSOS, which is another pot stock space name. Looking fantastic, especially considering we were just looking at Tilray and it was stuck inside that really big candle. It had fallen down and now it's stuck and it needs to get itself out of that candle. But MSOS, it's already outside of that candle and continuing to drive. And look at that move, right? Since the 30th, when that news came out on the pot stock space. And while this probably won't last, there's still so much in that space that needs to be dealt with. That's a nice run, and it doesn't appear to be done yet. You might want to look around at other names you can find in that space. They could be getting a short squeeze, so check their float. You know, check the cover, see how long it's going to take for that. It's got a nice play. And on the other side of it, when they finally stop the run, they're going to fall, right? They're going to fall back to earth in a fiery explosion. So there's that play too. Might as well keep that on your radar. This isn't exactly a penny stock. You know, it's at $8, nearly $9 this morning. But it was at 6.5, you know, last week. So Some big crazy moves. Semiconductors are down this morning, still getting whacked. But if we look at it on a daily chart, we really don't have anything in our way. So we're inside yesterday's range. Got to get outside of that. There's a lot of indecision here. You can see the wicks on both sides. Nobody's in control. There's just this big battle going on here. And whenever it resolves this range, it should be one heck of a move because we're building up energy while we're sitting here. So we're just building up, winding up more and more energy. The semiconductors are going to take a move. There's no doubt about that. But it's a lot harder to pinpoint when that move is going to happen. So buying a call or buying a put is not really a good idea if you don't have a time frame, because time decay is just going to eat all your premium up. Probably have to approach it with some sort of spread. And by doing the spread, you kind of shunt that decay a little bit, as much as you can. All right, big moves in energy. Remember, USO is connected to the report that we're looking for, but the report will be tomorrow because this was a short week. But there were still the OPEC news and the expectation that this is going to continue to go higher. They're going to revisit that decision in December. So between now and then, you know, there's not much they can do about it. This is going to translate eventually into inflation, right? If people have to pay more for energy, then they're going to have to pay more for the products they produce. And they're going to charge more for that to kind of compensate or cover. It's going to raise prices on everything. And that goes to the narrative of higher for longer with the Fed. So it's worth keeping your eye on that one, no matter which direction you go. All right, green to red on Apple. We closed near the high of the day, and so far this morning, it looks like we're going to open where we opened yesterday. We still want to see Apple get outside of the range. So as long as we're still inside of yesterday's price, then we're just maintaining this IX10. If Apple breaks yesterday's low around that 187.65 area, then we'll focus on Wednesday, August the 30th. 50% of that candle, and then the lowest point of that candle. 184 area, which lines us right up with that 10-day moving average. This is a nice little pullback and a test after this run, right? This is good. It's healthy. It's appropriate. There's nothing wrong with this pullback in Apple. And the news wasn't really that bad. It's not the first time that China's come out and banned certain things. A year or two ago, they had a lot of office workers say that their employees needed to use domestic computers instead of, international computers. And that hit companies that were selling a lot of computers in China, but things stabilized pretty quick, right? So not too big of a deal. MSOS is an iShares product. So it might be an ETN, but yeah, it says ETF there. ETF, pure cannabis ETF. And there's MJ, right? Alternative Harvest ETF. That thing's MJ, just looking at it, makes me think of a double or a triple leveraged junk product, like one of those go to zero VIX, UVXY kind of junk things. That's exactly what this looks like. It's not one of those, but it's what I think of when I see it. But MSOS, I mean, that thing it's really trying, right? On the daily, and look at that. Hoorah. Now there's a lot of things going on with this space, but and look at that gap this morning. I mean, we're just still going up. I don't think we're going to make it back to that $13 level, but so far this thing isn't slowing down. And there's so much publications on this. It's hard to weed out, not on MSOS, but on this pot news. It's hard to read through all the noise between the hype and what people want versus what really happened and what we think is going to stick going forward. I haven't had a chance to dig through all of it yet. I've just been kind of playing the chart itself. So we got a gap down in Amazon. It's below the 50% mark from Thursday the 31st. Let's take it out to a weekly. We're still above that 10-week. And we're still above last week's 50% mark. That's the line in the sand that needs to hold. And speaking of that line in the sand, already this week, Amazon went down and tested that 50% mark. So, it's not just me randomly choosing to mark 50% levels. It's the fact that you really want to use these measured moves and measure these candles out, because they'll offer you insight. Even if you don't want to trade it, you just want to have an idea of what's going on, measure a candle. Right? It's not the only one. Obviously, we can look over to this bigger candle that we've been in, and it's not done yet. All of this price is inside of that massive candle, which is an earnings candle, and it's not really helping us to measure that. That wasn't helpful, right? We didn't really get anything out of it. So we just turned that one back off. This one right now is the one in control. It's the one we want to keep track of. We had this beautiful TRB set up and it failed. That's done. It's just trash. But we're still holding above the 10-week. We're holding above that 50% mark, and we kind of need to keep it. So this morning, that 136.50 for Amazon isn't what we need. I'd kind of like to get that test off the 10 again, like we had yesterday, a nice little 10 bounce. We're on the 10-day now. We come down and get that bounce and maybe try to rally again. Look at all the buying on Friday that brought price up off of that low, and all the buying yesterday that brought price back up off of that low. So there is a lot of buying going on. It's just not enough to keep us going. And if we mark out Thursday the 31st, the 50% mark on that line matches up with the 10-day, and it matches up with that bounce from yesterday. So a whole lot of stuff is at 136. If we're looking for a long in Amazon, I would be ready to go long when we get around that 136 area. Remember, we can overshoot it, right? It's not like we're going to expect it to turn right on a dime and go up at 136. But that's kind of the line in the sand. We want to close above that today. So watch this as the day wears on. Look for this thing to start working its way up off of that 136. And if we're really lucky, we will set up for a TRB tomorrow, which will be like a gap and go and get us up to 140 by the end of the week. So we want to think ahead, right? We're basically looking for that really big candle, the one that looks like this, or in the other direction, the one that looks like that. I don't think that today is going to be the day on Amazon that we get that. I think it's going to be the next day, right? So one more day stabilizing and basing, and then a pump and push 140. One thing that you could do is try to build some cheap options around that 140, like a really cheap butterfly, or you could buy an out of the money call debit spread at that 140 area. Just put a little time on the debit spread. It's not going to hurt you to use October debit spread, even if you think the move will happen at the end of the week, right? Just add a little time. Your trade might not make as much money as the one that would be closer, but you can roll that October one into this week's expiration if we do get that move up, and you'll get paid for that roll, right? So it's a good way to go. I like doing that because if you don't get the move, your call debit spread is still valid. You can hang on to it, right? Because it'll be an October expiration. It won't lose money very fast because it has that time buffer in there. It's a really nice trick that we can use when it comes to rolling. If we're right, we roll into it and get more profit. If we're not right yet, but we're not wrong, we can just hang on to it. Cool, cool. Yeah, you like it. Snow. This thing like came out of the blue, 2 years ago, 3 years ago, we wasn't talking about snow, but it's on the FANG list, the NY FANG, right? The Magnificent Seven or whatever you want to call them. It's in the NY FANG, so we got to look at it. We're down a minor amount this morning, not very much at all in the grand scheme of things. And after being compressed in that IX10 for 3 days, the expansion should have took us back to the top. So the fact that we didn't do that and we had that weak day, and now with yesterday's move, we weren't even able to get out of that. That's now the line in the sand, 160. And even if we do get through that 160, we got some serious resistance at 162. So kind of keep that in mind. A lot of trouble there, but we do have a gap that we're going to work to resolve at 160, we'll call it 167. 166.67. Whatever. For some projections, just use the biggest candle you got and give yourself 50% and then 100%. We don't want this to get weak enough to come down and test that 10-day. And when we do take it out to the weekly, we're underneath that 10-week, and that's a really big deal. We're IX10 for the 3rd week after earnings here, back on the 3rd week of August. So we're IX10, we need to get out of that 161.93 and make that drive to the upside. Multiple levels of resistance, 166.67, and then 168.61. Lots of resistance up there if we can negotiate that 10. PayPal, its options aren't very comfortable. And these big drops at earnings continue this march to the downside, which is still not done because we're still printing lower lows. Now, granted, I am on a weekly chart, but if I was to put a Linreg line on here, that would be a fantastic slope to the downside. TradingView's got a nice one. It's got a pretty and colorful channel. So there we go. I just want the line, but the channel is got a pretty cloud to it. You can see through it nicely. The slope is unmistakable. So if you're looking for a longer term play in this, you still don't have any valid signal for a long. let's negotiate with that 10, be the 10 week. And if we do go over to the daily, you can see that we're holding above it, but we are IX10. Well, excuse me, we were IX10. We broke out of that yesterday. We need to keep it. And so far this morning, it's not looking good. In fact, yesterday's candle is a big warning. So sellers were waiting up there, buyers are waiting down here. We're really compressed, just sitting there tight, building up energy. Look at the turn on that 10. I mean, that's pretty impressive. And the fact that we're riding that 10 to the upside, that's great. But this candle is different from all of these that got us to our location. Starting from way down here. That day was the change day. And then we had a whole 5 days of running. But that candle yesterday, I think, is a signal that something is different. So we need to negotiate with this candle, get out of it one way or the other. And if we do break to the downside, we'll worry about that 10. It'll be the target first, and then we'll figure out what we're going to do with it at that point. Let's get there, and then we'll deal with it. To the upside, I think the ADR would be some good targets because these candles are a pretty reasonable size, consistent. It's not perfect. Should get us at around a 65-ish. And if we need to, we can measure the big candle here. Yeah, 66. All right, we got AMD here, but I mean, there's nothing here. All right, we're still stuck in that third week of August candle. That one. We got to get out of this candle before we can do anything else. We're back above the 10, but that 10 is basically sideways. It's no help. It's not even helpful as analysis, let alone for any kind of trading. AMD is just in a world of trouble. It's got to get out of this box before I even want to consider doing anything with it. Now, this is a weekly, so on a smaller time frame, you might find some opportunity in there. The Thursday, the 24th. That's the candle we want to measure. If we can get through that 111.64, then we've got 117 on deck. Got a couple of gaps to deal with. But yesterday is going to be hard to work with, right? I mean, that's just a really big, wide candle, and we've got some room before we get to the top. We're going to probably wrap it up with Microsoft. There's no reason to continue to hit on these. The theme is pretty consistent. That big red day, August 24, measure that out. We're back inside that zone after getting out of it yesterday, and that's not good. The fact that we got out of it yesterday, we should have kept it. And now this morning, we're back inside this box. So that doesn't bode well. Now that we are back in the box, we just want to use yesterday's zone. 50%, or the line in the sand for this morning, is 131.76 for Microsoft. It really needs to stay above that. Now, look, it can wink down. It can wick down there a little bit, but it needs to really, if it does get down below that line, it needs to get back above it, continue to hold above it, definitely close above it today. If we can do that, we can try to work on this range for the week. But so far, it's not looking good for Microsoft as any kind of swing to play on. This is a nice base and curve. This is a nasty, ugly inverse head and shoulder. I know you can't see it very well, but you know, I don't know, close one eye and tilt your head sideways, squint with the other, kind of see it in there. On the weekly, that's more of a nicer scoop pattern. We are back above that 10-week. This TRB failed miserably. But this is the breakout week. So it can make the entire run in a single week. That's why TRB is so fantastic, right? When you finally do get that breakout, that one candle is worth all the wait. Here's an ugly version of a TRB. That big candle right there made it to the top of the range in a single day. That's why we like those so much, right? Because when you get that move, man, it moves. It's worth it. But this isn't looking very good so far. Again, that does give you cheap opportunities if you wanted to try to butterfly the 366, 367 area, or if you wanted an out of the money call debit spread for maybe October, monthly October option expiration. If you're wrong, right, that trade isn't going to be salvageable because you built it out of the money that far, but it should also be pretty cheap. All right, people, be careful, be safe, have a good week. I'll see you all tomorrow.